Hi, my name's Claire Matten, and I'm here to talk through some of the industrial real estate trends we saw here in Missoula County through 2025 and what we're projecting to come our way in 2026 moving forward. So in 2025, we saw an interesting kind of push in vacancy, a little bit above where we'd sat in the previous 3 to 5 years. We typically had well below the national average vacancy rates, typically hovering around 3 to 5%, often more towards the 3% range. And with the closure of some of the larger operators here in Missoula, we saw that tick up to just over 6% midway through 2025. And now, as we kind of close out Q3 and Q4, we're looking at vacancy rates closer to over 11%, close to 12%. And I know that probably feels scary and sounds sudden, but we anticipate a lot of that kind of larger footprint space to become absorbed in the next year or so. A lot of the vacancy is due to United Forest products leaving the market totally. We had Yellowstone pack up most of what was in Missoula and kind of move that operation to Texas. And so those were just big chunks of property opening up all at once. So we have this little surge of vacancy that we're going to see get absorbed as we move forward into 2026. And some of that vacant space has some obsolescence to it. It's older space. Some of it has low clear height, lower grade level loading doors. They don't have docks. So it is not going to be a fit for everybody, but those are likely going to be kind of chunked up into some nice operational spaces for some industrial folks as they move here into Missoula. On the rental rate side of things, we had this kind of build up over a few years there, 2020, 2021, even 2022, where rates were just ticking up significantly upwards into the $12 to $14 a foot space. Some R&D lab space was even closer to $15 a foot. We've seen that soften in 2025. So our average industrial rates now are kind of hanging in the low 11 to mid $11 square foot triple net range. And there's a lot of factors that go into that, depending on loading and if you have yard space, clear height and location, all those things contribute to that. But overall, we've seen some softening from the mid 12s down to about mid to low 11s per foot on the typical asking rate range. In terms of sales, transaction volume continued to kind of level off and slow in comparison to some years prior, 2021, 2022. Obviously, some of that's contributed to the interest rate environment that we remain in. But I think the opportunity to acquire an existing facility has become more and more attractive over these previous few years because the cost of construction continues to climb. We are in a tight labor market here. And so labor costs are typically much more expensive than some of these larger metros in the Sun Belts and things like that. Additionally, land costs have not softened. And so when you can take all of those things into consideration, plus interest rates for construction debt, an existing facility looks a lot better. So the current sales price per foot has remained healthy and high. There's just very few transactions because nobody wants to move either. So that's been a little bit of the game that's kind of been going on in 2025. And so moving into 2026, what we are seeing now in the pipeline, we are likely going to see a lot more small bay opportunities become available either for lease or for sale, which is great. Those are perfect fits for trades and small operators that want to own their space or have something that's the right size for them without taking on too much. We've had a couple of those projects deliver and be very successful, and there are supposedly a number of more in the pipeline. So if you're considering doing a project like that, I think it's great. It's probably good to chat with us so we can inform you how to make your project a little bit more unique than the others that we know are coming online. Some of the requirement trends have shifted from users in the past. We have a lot more requests for lay down yard, fleet storage, things like that. So if you've got a facility with an extra acre or two, that's great. That's what everybody wants right now. So lastly, moving into 2026, a lot of that vacant square footage that I talked about is already headed towards absorption, which is great news. So we're going to see that vacancy level likely trickle off and tick down. We may see it rise again with the delivery of some of this small bay product, but overall an optimistic look. Demand is still very high. Lots of quality operators moving to our market or expanding. And so we're excited for 2026 and what it brings for the industrial sector.